a simple SMC breakdown, a strategy that you can learn, apply, and consistently make $10,000. Okay, let's go into business. Let me show you. Now, this video is going to carry 3 steps. First of all, I will take you on directional bias. Secondly, I will take you on points of interest. Thirdly, I will take you on LTC confirmation. Simply means lower time frame confirmation. Now, let's go with the first one. Directional bias. What is directional bias? Directional bias has to do with determining the direction of the market trend, alright? Knowing the side that the market is trending into. Now, the market moves in 3 phases. The market moves in bullish phase, bearish phase, and a consolidating market, right? The market that is currently moving in one place. But for the sake of this video, I'll more focus on the bullish and bearish trend. Now let's get down to business. The first thing to look out for when you open your trading view first is to check the directional bias. Check the side the current trend is heading to. Is it the upside or the downside? Now, what will determine the current trend of the market is the recent break of structure. Now, when you get into the market, first thing you do, you look for the recent expansion. After the expansion, you look for a break of structure. And what makes a break of structure to be valid? When you see an expansion, you see a pullback, see another expansion. This place here becomes a break of structure. Mind you, everything that I am going to be teaching you in this line, we are going to carry every detail from here, apply it to the live market, backtest it, and then see how it works. Now let's get there. So once you confirm that you have a break of structure, now you have confirmed from the first very moment that you are in an uptrend. But then things to look out for again. Once you confirm a break of structure, what you do, you kindly spot out the lowest point of that break of structure. After spotting out the lowest point, you wait for a pullback. Now you can see we have a pullback to a certain level of support, right? After that, what do? We expect an expansion. We can leverage on taking a buy from this point to the upside, higher high. Good. Immediately you see something like this, you know that yes, you have broken out of the current trading range. You need to focus on marking the next trading range. So when you confirm this higher high, what do? You start expecting a pullback. Now you have a new swing low and you have a new trading range. So immediately you see this, you know that you are expecting a pullback to some certain level of support here, so that you can look for buying opportunity to the upside. Mind you, while this pullback is happening, you can leverage on this opportunity and look for selling opportunities as well, right? Everything I've said here, we are going to practice it and see how it works. So now the pullback phase is done. You have another expansion to the upside. What do? You spot out your break of structure. After spotting out that, you update your swing low. Swing low means the lowest point of a particular trading range. All right. So after updating the swing low, you are expecting another pullback to the support level. So you can actually take a buy. This buy is also known as an expansion throughout the current trading range, because as you can see here, this is the current trading range. So during your stay inside this box, you are looking at internal activity. So everything that's happening inside of this box is internal. So immediately you update your swing low, what you should be looking out for is a pullback phase. Here you're waiting for the price to pull back to somewhere around this place, then continue, right? So you can leverage on this support and take some buys. Very pretty much simple. But then the price does not always move in a bullish phase. When it moves in the bullish phase for a while, it moves in the bearish phase. And when you see that this swing low has been disrespected, the price comes here, instead of it to respect the trend, the price come back, instead of it to respect the trend and go up, it disrespects this swing low by breaking it to the downside. This break to the downside is what we mean by a change of character. After this change of character, what we are now looking out for is our swing high. Remember when the trend was going up, we were looking out for our swing low. But now that the trend has changed its direction to the downside, we are now looking up to have swing high. What are we expecting in this scenario? We're expecting that when the market gets to somewhere around this place here, it will respect this resistance level and then give us lower prices. You see that? Pretty much simple, right? It's just the same thing. The way you read it matters a lot. So after this, you see that we now update our structure. You have a break of structure here. After this break of structure, what else do you expect? You update your swing low. Very important. so that you know the current trading range you should focus on. Immediately after that, you can as well update your swing low. Here you have a swing low, you should have a swing high. You have your swing low. Now you are very much interested in things that happen inside of this place, right? You are just more focused on things that happen inside of this place. When this trend is coming back, you are looking for buying opportunity based on confirmation. When it gets to the resistance level, you are looking for selling opportunities based on confirmation. Simple as that. And in this video, I'll be teaching you my 1 minute time frame strategy, confirmatory entry. This is a question that so many people have been asking me for a very long time, so I'll be giving that here for free. So this is pretty much simple and predictable, right? So you see here, expect just like that. Now let me show you a more complex way that market structure is going to appear. Remember, in school settings, they will give you classwork, they will teach you in the classroom. There, when they are giving you a classwork or assignment, you see something different totally. So it's the same here. Let me take you. So the simple market structure you saw earlier is pretty much simple as compared to this. So what if you arrive in your chart, you didn't see something like that, you see something just like this? What are you going to do? Now listen to me. This is how the market looks. Naturally, this is how the market looks. It's not as perfect as the previous one. The market looks like this. Now when you see things like this, you begin to panic. You start saying there is no, like, what you thought was is not. Calm down. This is where most traders make mistake. If you approach this market, you're not careful, you didn't master the act of marking your zones correctly, this is where you're going to fail as a trader. And this is where you are going to start saying the trend is after your stop loss. Calm down, let me explain it to you. What did I tell you? Once you approach the market like this, look for a current expansion. You see this expansion very clear, right? Good. So once you see that kind of expansion, you know that, okay, this is the current market trend. Immediately you mark out the highest point of that expansion. Now let's take this highest point of this expansion to be our swing high. You mark out the lowest point of the expansion. Let's take the lowest point of this expansion to be our swing low. So now you know that we now have a trading range. Everything that now happens inside of this trading range is considered as internal activities. Once you are able to read this movement as internal activities, trust me, you are 50% closer to your destination of being a pro trader. I will remove this right away. Let's go down to business. So once you mark out your swing high, your swing low, let's imagine the trend was currently running inside of this place, right? So this one has not yet break up. So everything that is here, you'll be reading it as internal. Okay, I will also give you an example that will show you how to read this thing properly. But then some people would think that, okay, this is my swing high, this is my swing low, then market will just do some kind of movement and boom, it gets to your stop loss. Calm down, let me explain. When you understand what I'm about to explain here properly, then you are not going to be a victim. When you see a scenario like this, you mark out your external swing, you begin to treat this as your swing, your internal swing. Remember I told you that when the market is pulling back, you can leverage on the opportunity and actually take sell trades. You sell to the area of support, which is here, and then when it gets here, you look for selling opportunities as well. When you get to your area of support, you look for buying opportunity. When you get to your area of resistance, you look for selling opportunity. As simple as that. So once this support gives us a new high, see, once it gives us a new high, this swing high now ceases to be our swing high. It now becomes a break of structure. See, very simple, a break of structure. Now you know that, okay, we have a new trading range. Quickly you update your swing low. See it now, you are no longer focusing on things that are inside of this place. You are very much interested in things that are happening inside this place here. You see, you are now moving to the next level. You are looking out for new opportunities. That is how simple it is. So immediately you update your swing low, you can as well update your swing high. See, after that, this is where most people make mistake. Most people make mistake by thinking that, okay, this is our swing low, so we are expecting price to come back into this place, respect this zone and go up. You are very much wrong. Look at where this breakup structure is. This is an internal structure, so price might likely use it as liquidity. 90% of the time, price always use this as liquidity. You get, because what is an internal structure. You don't read it like that. You follow external for now. You look at your swing low should be external. You read it as external. When it comes to internal, you read it as internal. All right. And I'll also teach you how to read internal and external structure. So if this internal structure was here, and then this breakup structure would have been here, that is where you will say, okay, this is my swing low, so I'm going to take my trade from here. But since everything is internal and this BOS is external, this is liquidity. Okay, immediately you mark that, you start looking for other block that is in your support area to buy. Now for this other block to be valid, you need to have numerous confirmations before you can look out to take buying opportunities. You understand? SMC is just as simple as that. And when this occurs, the next thing you do is immediately you have the buy at this support. It gives you a breakout out of this swing high. This swing high automatically becomes your breakup structure. Immediately after the breakup structure, you look out to update your swing low. Immediately you update your swing low, what do? You look for selling opportunities from the swing high here, from the current swing high. You see, this now becomes our swing high. So immediately you update that, you start looking for selling opportunity to sell the market, right, back to the support level so that you can take some buys. As simple as that. This is the way the market moves. So let's take 4 hours time frame to be in black, 15-minute time frame to be in red. Now 15-minute time frame give us a detailed information of what the 4 hours time frame is about to do. Before the 4-hour time frame make any moves, 15-minute time frame already give us an information. So it's just like you have a spy in an organization. If the organization is about to take a step, you just get the information from your spy and then go ahead of the organization. As simple as that. Let me explain. Now, when 4 hours time frame is moving, is trending high like this, giving us a pullback and trending high, the 15-minute time frame will be moving like this. So why is it moving like that? Is it that the 15-minute time frame just want to trade the 4 hours time frame? No, the 15-minute time frame is moving in its state. This is where people get it confused. They say which time frame is the best time frame to trade. There's nothing like the best time frame to trade, especially in SMC. You combine all the time frames together to look for your entry, and once you get your entry, you look at your target and then you are out. As simple as that. Now let me show you what you should be doing in the 15-minute time frame, in the 4-hour time frame is trending. Okay, if the 4 hours time frame is moving, or when you come to the 15-minute time, you see something like series of break of structure. What you should be doing is to look for buying opportunity. You buy up, you see a break of structure here, break of structure here, break of structure here, as the case may be. Then when the 4 hours time frame is about to give us a pullback, you will now see something like the 15-minute time frame will give us a break of structure, series of break of structures. Then all of a sudden, the 15-minute time frame will give us a change of character. I'll just put CH here so that this whole place will not be piled up. And after that, what we do as SMC traders is that from this 15-minute time frame, we look for sellable opportunity to sell the pullback. Right? Mind you, everything I am showing you in this video, I am going to give you a back-tested result to prove everything I'm saying. You get? But then in this 15-minute time frame, we don't just take trades like this. We take trades based on confirmation. We have LTC confirmation, which I'm going to show you in this video. You have to stick around to the end. All right? So after this, once you see that the pullback phase is over, you will now see that the 15-minute time frame will still give us a pre-information that the pullback phase is over by changing character. And now, when the 15-minute time frame change character, I would still put CH here. What you need to know is that remember that we had a break of structure here, we had another break of structure here. So now you see that the 15-minute time frame is giving us a series of break of structure to the downside, break of structure, and all of a sudden we get a change of character. That is to tell us that the 4 hours time frame want to give us an expansion. So the 15-minute time frame will give us a pre-information. What we do as SMC traders is very, very simple. It's just to spot out the support level from that 15-minute time frame, wait for the trend to get back here, then we go to our 1-minute time frame, execute our 1-minute time frame confirmation, then take trades. And trust me, when we take this kind of trade, you see trades like this. When we take this kind of trade, it gives us high risk to reward ratio. Now, the importance of this 1-minute time frame is to confirm that the price truly wants to go your direction. One. Secondly, is to give you high risk to reward ratio. You understand? Then if you are new to this channel, consider subscribing, turn on the notification bell so that when we are dropping update like this, you will be notified on time to come and leverage on the opportunity we offer here so that you can better your trading career. Every day in this YouTube channel, I drop YouTube shorts that is going to give you a breakdown of directional bias of the day. It's just like signals. When you go to my YouTube short, you understand better. Let's continue. So immediately we see something like this, kindly leverage on this opportunity and take profitable trades targeting the 4 hours time frame swing. You can see with this now, you see that the risk to reward ratio is very, very high as of compared to the example I showed you here. So that is what you need to know. Now, after all I've taught you, from this market structure to the complex market structure to the simple market structure, now let me now take you to the chart and apply all these things and do a back test so that you can see how it works. Let's go, guys. All right, with everything I've taught you, when looking at this chart, you might start to panic. Don't panic. Let me pieces this chart for you. When you approach a chart like this is BTC anyway, in case you want to try it out. When you approach a chart like this, what did I tell you? Look out for the recent break of structure in the 4 hours time frame. As you can clearly see, I'm operating in the 4 hours. This is our initial break of structure. After spotting out the break of structure, you spot out the swing. Okay, agree with me that everything that happens inside of this place have not yet happened. So price is still currently in this place here. All right, good. So let's go down to business. We have marked out our break of structure. We have marked out our swing low. What are we waiting for? Waiting for price to come back, give us some confirmation from this place, and then boom, give us another expansion, giving us the opportunity to leverage on these buys, right? But then, as I earlier told you, the price cannot be running in a bullish way forever. When the price is going bullish for some time, then you will come and discover that the price will start going bearish, not for any reason, but that is how the market moves. Remember the last explanation I gave you that when 4 hours time frame is moving like this, the 15-minute time frame is moving how? Zigzag, something like this. Right? Now let me go to the 15-minute time frame and spot it very clear so that you can understand what I meant by that. Anyway, focus more on this place. Let me use this place here to explain as it serves as a more clear example of what I'm talking about. Then after this video, after this explanation, I will take you down to a trade we took on this YouTube channel. We spotted it before it happened, and we took a trade that gave us over 9 risk to reward ratio in profit. So let's get down to it. You see that place you were looking at to be very, very straightforward. When you step to 15-minute time frame, you begin to see something like this. Remember what I told you? In 15-minute time frame, when the 4 hours time frame is pulling back, in 15-minute time, you see a series of break of structure, break of structure, break of structure. Then once the 4 hours is about coming back, you see what? A change of character. After the change of character, what did you see? You see a series of break of structure to the downside. Now let me mark that very 15-minute time frame line so that you can see how it works. You don't tend to see more of this in the internet because people wouldn't love to share you this much information for free. So everything you see is you pay for it, but I took my time to make sure I give this out for free so that you can also go and learn, master, and then start making money from it, right? So remember the line in red, 15-minute time frame movement. You see, after that we have what? A change of character. After that we have an expansion to the upside, just like this, and then and so on. Now let me take you back to the 4 hours so you will see how it looks. You see how it looks, right? From here, you see here, an expansion. After that, a pullback. You see? So remember the line in black. You see, just a pure example of what I told you. Now, how do you leverage on all these 15-minute time frame ups and down? Let's go back to 15-minute time frame. Let me show you something. Now, when the trend was moving up simultaneously, you could leverage on tradable opportunity from here. You see, here, when the 15-minute time frame is moving, it must not give you trade. Not all break of structure gives you tradable opportunity, but the ones that gives you tradable opportunity, don't ignore the aspect of taking the trade. You see how this one is so perfect? You can take for a trade from here. You buy to the upside. Then when this one broke out, you see we had an order block in this place. You see, when you go to 15-minute time frame, you see series of confirmation. It came here, 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 confirmation, here, take the trade from here, you sell down. You see, I'm going to break this down for you so you don't have to panic. Don't be confused. Let's consider this sweep as a news reaction. We wouldn't pay great attention to this. But then let me continue by showing you when the market moves up, we're expecting that it will respect the support level and then give us higher prices. But it came here, made some reaction, then gave us a change of character. That is where this becomes very interesting, because our swing low has suddenly become a change of character, indicating that what? That the market is no longer going up, but it has changed its character from an uptrend to a downtrend. So what do? Immediately, we spot out the highest point of the trend and mark out our swing high so we wouldn't make mistake. After that, we spot out the lowest point of the trend, say this one, yeah, the lowest point of the trend, and this becomes our what? Swing low. Simple. When you make all this marking, you see that your chart begin to take shape, and then you begin to take decision based on your strategy and not based on your emotions. After this change of character now, we were expecting a pullback. You understand? We are expecting a pullback to this place here, then we are expecting an expansion. Do you understand that? So in this pullback phase, remember I told you when the price is pulling back, you can leverage on a 15-minute time frame and take buying opportunities, right? Now let's go down to business and take those buying opportunities so that everyone is going to see how it works. In the 15-minute time frame, we have a break of structure over here. We have another break of structure. You see, immediately after this break of structure, what do we do? We spot out the highest point of the trend and quickly mark out our swing high. You see, now we are now dealing with internal structure. So this is our what? Internal swing high. So we put it as what? Internal swing high, right? So we mark out our internal swing low. We're expecting that the market comes to this place, this support level here, give us a confirmation and then give us an expansion. We are very much interested in taking buying opportunities from the inside of this place here. Do you understand? Now we have, this is where other blocks comes in. But then most of the time the market tend to liquidate this place here with a wick. The market tend to liquidate your lows or your high before going your direction with a wick. When the liquidation comes with a wick, it means that it's just a sweep of liquidity. But when the liquidation happens with the body of the candle, it means that that is a different thing entirely, either a change of character or then break of structure. But then when it was here, I quickly mark out this place as liquidity level. Since these both lows are pretty much similar and very much close to themselves, you can check my reel. I will put it on the screen here so you can go and check it out as of when I dropped. As of when I dropped this video now, you know what? I marked this zone and this zone here. This zone here. This is the internal swing low, and market is expected to come here, revise here and go back. But then you will also give respect to liquidity. As you know, as you can see, there is no much liquidity inside of here. What is liquidity? What is this liquidity I'm calling? Liquidity is a position in the support and resistance level where early sellers and early buyers place their stop loss. You get, what do early sellers do? Early sellers place their stop loss here, place their entry here, their stop loss here, and then their take profit probably here. That is exactly what early sellers do. So the concept of liquidity comes here in this place, trigger their orders, move in their direction for a while, liquidate them, then give us a confirmation. Then we, the SMC traders, now carry it up with my own modified SMC entry model. You get, that is what is going to lead us to the LTC confirmation. But then let us play price up and see how everything goes. So I mark out this zone and this zone because I know that this place here is a very big pocket of liquidity, and the market will trigger most of the early buyers to place their stop loss here, and they will liquidate all those orders, take us inside, and then we go. So let's play price. What we are looking out for is the market to respect this zone or this zone. Whichever of them the market respect, we are going to take our trade regardless. So the first thing to take note of, if you are looking for an order block, one, an order block must have a fair value gap. That's one. Another block must have liquidity. Two, an order block must be in either a support or a resistance level for it to be a valid order block. And you can see this one here. If you go to the 4 hour time frame, you see that this is a very unique order block. Let's go to 1 hour time frame and check it out. 1 hour time frame, see where the 1 hour time frame order block is, right? So we are going to leave it here in the 1 hour, but then let's go to the 4 hours time frame and see if the 4 hours time frame agrees with the 1 hour time frame. Okay, everything is in place. So let's go back to the 15-minute time frame and play price out. Then let's also check the order block. This one here is placed in place. Now I want to show you something in this place. When they mention order block, they didn't put this. The lows between this bearish and bullish candle is also an order block. Go and do your research. These lows, the bottom line of the bearish and bullish candle is also an order block. This is where I introduce you to my LTC confirmation, the long awaited question. What is LTC confirmation? LTC confirmation is a lower time frame confirmation that indicates to us, the SMC traders, that the market is tired of moving to a particular direction and it wants to change its face. You get, and then we follow that very decision and make money. This might look confusing, but then let me quickly change it and put something that is pretty much simple. This is LTC confirmation. This is how it goes. When the market moves from this place to this place, what we want to see here is a break of structure in the 1 minute time frame. Here, BOS, break of structure in the 1 minute time frame, and then we want to see a change of character in this very 1 minute time frame. A change of character in this very 1 minute time frame. Then after that change of character, we'll look for an order block within the range, and then looking forward to take profitable trades from this place. Now, what is the essence of this LTC confirmation? The essence of this LTC confirmation is to, 1, give us high risk to reward ratio. 2, confirm that truly the market decisions to go in our favor is correct. Let's apply it. Let's play price and see the reaction of the market when it gets to our point of interest. Okay, it has gotten to our point of interest. The market has fully gotten to our point of interest. So we are going to go to the 1 minute time frame and see how things go. Okay, we are currently in the 1 minute time frame. So what are we looking at? We are looking at a break of structure to the upside, and then we are looking at, this is the recent high, that was the highest low, the recent low to the downside. So this becomes our break of structure. You see, then immediately we mark out our break of structure. What next? We mark out our swing high. We are looking out for the market to come from this place, break this swing high, turn this swing high into a change of character so that we can buy. But if the market comes to this support, this resistance level, resist from here, keep going down, then it means that the market is not yet ready to buy. So we keep waiting until the swing high is being taken. So guys, let's play price again and see how it goes. Let's move out the 5 minute time frame and rush things up. This video is already taking more time than I ever expected. We have a sweep off of liquidity. Let's go back to the 1 minute time frame again and check things out. We have a sweep. Let's see. Okay, we have a new break of structure to the downside. Okay, now see this. This is something that I want you to take note of. You see this change of character, the way it occurs. It's actually changed with the body of the candle. If it was something like this, we wouldn't have considered it a change of character, because any change of character that happens with a sweep is not a change of character. For a change of character to be valid, it needs to break with the body. So this one literally break with the body. So we are considering it a change of character. And inside this change of character here, we are now looking forward to change this into a change of character that it is. Then we look for a point of interest to buy from, because this has been confirmed that the market is truly tired of selling after sweeping this liquidity. Now it wants to take some buy, so we need to leverage on this buying opportunity. Now everything has been confirmed, the LTC confirmation has been taken, everything is in order now. So we look out for a point of interest, the place where we want to take our buy from. Okay, we have another block here, but it has been mitigated, but we have another order block here. I hope you guys can see it here. Yeah, we have another order block, this small one here, that has not been mitigated. Although we have a week was like coming to mitigate it, but it didn't work again. So for me, this is the low that put up this high. You see, this is the low that put up this high. So it's a very valid one. So for that reason, we are going to take our trade from here, and we pray that it tag us inside, since we have gotten the confirmation that we were looking for. Okay, then we are going to put our stop loss in this swing low. This is also an internal swing low. You get a little bit below the swing low, so that even if the market wants to come and manipulate, it will not affect it. Even if the market want to come and manipulate the lows, it won't affect it. So we will bring our stop loss a little bit below the swing low, so that we will cover the lows. All right, now what is our target then? Remember, BTC generally it's in a pullback phase. So let's check the 4 hours and see where we are going to be targeting this trade. So we have this resistance level, we have this resistance level, and we also have the internal swing high. But then let's put it in this resistance level, because we are very much sure that the market is going to take out this level. It seems like it won't tap us inside. Okay, it's currently reacting in the zone. Oh, this we are not tapped in. Okay, see what happened here. This trade almost took us out. You see what I told you guys, it almost took us out. See why it's very important to cover the lows. We almost got out of the trade, guys. But then I still want you to see something. This liquidation occurs with a wick. This is a sweep of liquidity, sweep the lows, because some people's stop loss will actually be somewhere around here. You get, so they still got liquidated. That is why you see all the trades that we take, we make sure we cover the lows, so that they won't kick you out before going in our direction. So let's rapidly play this trade out and see how it goes, because this video is already taking too long. And see the movement immediately after that, it gave us a very good movement. Again, this is why I love SMC so much. While all these things are going on, you need to be patient here. Patience is one other thing again. So you can see the movement and the delivery rate, right? You see, immediately it gave us, we got over 9 risk to reward ratio from this trade. And in the analysis we shared and the directional bias we shared, everything play out as simple as this. Now, I will be dropping this video on a Saturday. So you take all I have done in this video, all the breakdown. It doesn't only happen in BTC. Look for pairs that obeys SMC. That is an assignment I'm giving to you. Not all pairs obeys SMC strategy. Look for a pair that obeys SMC. Minimum 5. The reason why I'm saying 5, because one pair will not give you entries, like give you multiple entry in a week. One pair might just give you 3 entries in a week. It might give you one on Monday, it won't give you on Tuesday, it won't give you on Thursday, it might come and give you on Friday, even 2 entries. So then sometimes when you don't see entries like this, you become depressed. And when you become depressed, you start taking drastic decisions. Anything that looks like entry to you, you enter the market, and at the end of the day, you end up blowing your trading account. Look for 5 entries, maximum 10 pairs. Look for 5 pairs, maximum 10 pairs. Don't go and gather all the forest pairs and start blowing your money up and down. Look for 10 pairs. Backtest, look, get a paid trading view. You are here if you want to learn. If you don't want to learn, if you want to play around, go and play. Look for a paid trading view. Backtest everything I've taught you in this video, carry it to your trading view, backtest over and over and over again. Before I master this thing, I have backtested over 500 trades. Do you understand? Now, if I am going anywhere, I see something like look like chart, I will easily scatter SMC for you. You understand? So you can backtest maybe 100 trades. You see the win rate of the strategy. If you really want to use SMC, you go on and use it. You understand? If you are new to this channel, subscribe so that every morning when we are dropping updates for you, you will be getting everything on a premium level. You get? So peace out, my guys. See you on the next one.